If you are going to open an exam kit, you won't find many questions on IAS 2. And that's what makes people overlook this very standard when getting ready for their SBR exam. But hey, not so easy. Because with SBR exam, we are not tested on standards quite often. We are tested on accounting implications, on the performance appraisal, on the perception of the results. So how can IAS 2 be tested? Well, first of all, we may be tested on IAS 2 in the context of cryptocurrencies. But hey, wait, cryptocurrency is IAS 38, you are going to tell me. That's if you study IFRS for its face value. Not exactly. When we're talking about cryptocurrencies and likes like initial coin offering, there could be different standards in play. There could be financial instruments, and we have a video on that. And it could be that it's going to be IFRS 15 revenue, actually. And it could be IAS 2. If a company is broker trader, if this cryptocurrency like bitcoins are held for resale, not for long-term use, then broker traders are going to apply fair value less cost to sell treatment. And it's going to be under IAS 2. What else can be tested in respect of IAS 2? And please don't forget to subscribe so that you don't miss the next videos. What can be tested is the difference between net realizable value and fair value less cost to sell. Is it different? Oh yes, it is, because fair value less cost to sell is based on the fair value. So this is irrespective of the company itself. It is based on the principal market, if that is available. When we're talking about net realizable value, we are talking about the prices that the entity has achieved. So if this very company trades not on the principal market, let's say not in the big city, but in the rural area, then it will apply its prices. Okay. And we could be asked about sustainability. So, for example, how the changes in environment, climate-related matters are going to relate to IAS 2. Well, for example, it could actually make inventory sell at less. Well, because it's not going to be needed by many companies anymore, because they're going to move to better solutions, and that would require us to test the inventory for obsolescence. I mean, we do that at each and every reporting date, because the inventory should be stated at the lower of the cost and net realizable value. But the problem in here is that the net realizable value that has been identified, it can be actually overstated. And that is what we will need to learn, and this is what we need to say. So IAS 2 can be tested. And the last one, but not the least, is what is tested against net realizable value. It's not raw material, it's finished goods. So if, let's say, we're a company that manufactures equipment, we can't use net realizable value for steel by just taking the steel's cost and comparing it with the net realizable value of steel. No. We need to look at the net realizable value of finished good. We need to deduct conversion costs, and that amount is going to be tested against the cost of steel that we have in our statement of financial position. So as you can see, IAS 2 does get tested, and even more, it's going to be tested in those most difficult questions where we have to discuss the treatment and the consequences, the implications on the assessment of the company's performance. So that is something that you need to be aware of, and subscribe to watch more videos like that. Bye!